Okay, good morning everybody. Thank you very much for dialing in to the Global Reviews webinar this morning. My name is Rebecca Jennings. I'm a Principal Client Advisor at Global Reviews, have been for around 3.5 years now. It's my role this morning to talk you through a review of the year, a review of the digital banking research we conducted in 2014. Across a number of financial services industries in the UK and Ireland. So what I'm going to talk to you about is the research we did both in how consumers research financial services products and also going through how they look at brand websites and make decisions to actually apply for these services. So we're going to look at the various stages of the customer experience and the consider and research and purchase cycle across a variety of markets within digital banking. Just very quickly, for those of you who may not have come across us a lot before, so we are Global Reviews. We have been helping clients optimize and understand their customer journeys for some 15 years now across the UK, Europe and Australasia. We can help clients understand the issues that 95% of your potential customers experience when they go through trying to research and buy your product on your website. And we can inform clients of the benchmark of their journeys against multiple competitors, as you'll see as we'll go through the research that we undertake. We're very much about helping our clients optimize that journey to both reduce the cost of acquisition of customers and also improve their online acquisition rates. So we work with a lot of well-known brands across a number of industries. There's just a few of those here. As you can see, we work with a lot of brands within financial services, but also external to financial services. We're very active in a number of other industries such as health insurance and various other types of insurance, motor insurance, home insurance, a lot of energy clients across the UK, Ireland and Australia, also into sports betting as well as other industries. Over the last few years we've done research into 25 different industries across the markets within which we work. So we have many years of experience across multiple industries and helping big brands such as the ones you see here really optimize their online customer journey, both at the consideration stage, how do they find your brand, but then actually when they get to your website, how do they find your products, how do they compare them, and how do they make decisions to actually purchase. And that's really what we're going to be looking at this morning, those 3 steps at the beginning of the customer journey, the discover phase. How do consumers, when they're researching products, find your brand? What kind of research journeys do they go on? How do they make their initial decisions on which brands to research further, to shortlist, and to finally choose? And that's the discover phase. And that's a piece of research called the Marketing Effectiveness Program, which we'll touch on. We then take the next step in that customer journey to look at the sales effectiveness. How does your website actually engage consumers, help them understand what you have, help them match your product and service to their specific needs? And then how helpful is it when they come to actually purchase the product from you? How do they understand what they need? How can they understand which channel is most appropriate for them? What's going to be easiest? What product data do they need to actually complete this purchase or application in this particular market most of the time? So that's what we're really going to look at this morning, the raft of data that we conducted last year that looked across the discover, consider and act phases across a number of banking products. So just a very quick recap of what it is that we're going to be just discussing here. Obviously we have around 45 minutes to an hour this morning, so I'm not going to show you every single piece of this data from all of these. If you are interested in any more research, please do contact us. But what we're going to be touching on today are those digital marketing effectiveness and digital sales effectiveness pieces that we ran in 2014. So you can see in the DME we ran pieces looking at how consumers find products, how many consumers find brands across credit cards and current accounts. Within the DSE, looking at websites, how effective the bank sites are actually converting customers online, how effective is your own site compared to your peers, and we'll see a lot of peer-related data. We actually ran that across credit cards and current accounts, same as DME, but also within mortgages and savings. So as you can see, there's a tremendous amount of data and research that took place last year. So what we're going to talk about is sort of the highlights of those two pieces of research, what we learned about how consumers find products, but also what are the key pains that financial services brands are suffering, or consumers are suffering, when they're trying to purchase from financial services brands. So very quickly, in terms of methodology, so people understand what it is that we did. The first piece I showed you there, the consider, the discover phase, is dealt with in the DME, the digital marketing effectiveness research that we run on a regular basis across multiple industries. This starts as a study of 200 in-market consumers. It's what we call a blank screen test. So these 200 in-market consumers are in their own homes using their own technology, their own computers. In this particular case, it's screens, it's laptops. We also do this research across mobile devices, but we're actually going to talk about in this webinar this morning is the laptop or desktop-based research. Those in-market consumers who are representative of the particular market in the UK and Ireland. The UK and Irish market studies are run separately, obviously, because the markets and the brands are different, but the methodology is the same. Those consumers are qualified as being consumers looking to apply for or switch this particular product in the next 3 to 6 months. So there are people thinking about this kind of product already. They're in the market. They are asked a number of pre-task questions about their preconceived ideas around the brands in question. Would they already have a preference before they started the research? What would they be looking for in this kind of research? They're then asked to go and do some research to find a current account that suits their needs, or a mortgage, or whatever the product is. And as I say, it's a blank screen test. We don't direct them to anywhere particularly. We just ask them to go off and do the research that they would normally do. We can track everything they do, so we can see where they click, we can see which sites they visit, we know what their search results, search terms they use are, so we can see where they go, what research they do, which brands they shortlist, and which brands they finally prefer at the end of the process. So how do consumers make those decisions? What affects those decisions? Do they change their preference from initial preference to last preference? What is the most effective brand, for example, in terms of changing people's minds as they go through this research? What are the lost opportunities? And then the next steps, the consider and act phases, are looked at within the DSE, which is based on mapping the journey on your website a consumer will naturally take. Over this particular piece of research, there are something in the region of 500 individual data points. These both come from consumers who are asked to do a number of tasks on websites, on your website, be that find a product, look for a contact phone number, rate the home page to see whether it meets expectations and suits their needs. It's also supplemented by a best practice audit that's conducted by the Global Reviews experts. So there are something which is 300 and 350 data points from the best practice audit, yes/no questions, as well as I say, the data points from the consumers actually going through the journey. So it's really a study, again, that uses in-market consumers going through this journey. It produces both qualitative insight from the consumers in terms of could they do tasks, a lot of voice of customer. They're actually asked to rate features and functions, but also asked open-ended questions about what they found hard and what they found difficult. So it's very much qualitative, but also quantitative in terms of the audit that is done across all the peer companies in a brand, in a market. And as I say, so it includes that competitor view, And again, very lifelike methodology. Consumers are in their own homes and their own technology. Again, this is something that's run across laptops and mobiles. What we're going to be talking about today is the laptop study, the desktop study. Mobiles is separate, but say same, very similar methodology. So just to finish the methodology piece on the sales effectiveness, and we'll see some data from these buckets, if you like, later. The consider and act phases are broken down into really understand the key pain points of a consumer's journey as they go through initial engagement, coming to the site for the first time. Does it meet their needs? Does it meet expectations? Do they look as if they're going to trust this website? Can they find what they're looking for? Can they compare it? Can they figure out which products are best for their needs? Does the site help them facilitate that decision? Why would you choose this brand? Can I reach out to the brand if I have an issue? And then channel selection. Should I do this application online? Is it best to do it in branch? What do I need? What are the advantages of the different channels? And then actually the form itself. Help. Is there help and guidance through the form? Does it make sense to the consumer? Can they get through it without needing to look for other information? Does it set expectations? Does it tell consumers what's going to happen at the end? So that's really the methodology, the DME and the DSE. So let's now get right into some of that data, starting with that first step in that consumer journey, that discover phase. How do consumers go about researching financial services products? So as you saw, we've conducted the DME and the DSE across a lot of brands and across a lot of markets in 2014. So overall, what have we learned about some of the hundreds of consumers that have gone through this research for us in 2014, looking for financial services products in particular? 90% begin their journey on a search engine, unsurprisingly, but it is interesting, and we'll look in a minute, about what they actually search for. What do they go on and search for in terms of the kind of terminology that they then use and where they go next. But they pretty much all start on a search engine. That is the default behavior for most researchers, and that's the same in most of the markets that we look at. 26% move from that search engine directly to a brand website, and that shows, particularly in this market, the power of the aggregators and the sort of advice sites, sort of the money supermarkets, for example. A lot of them then go from the search engine to a comparison site or an aggregator or an advice site rather than direct to a brand. And that is a little different in some of the other markets we look at. Unsurprisingly, within, for example, sports betting, that doesn't happen. About 80% of them go directly to a brand website in that market. And here we have this sort of break, interim, interrupter, if you like, of the aggregators. On average, around 69% of the consumers that we research have an initial preference for a brand in the markets we're talking about before they research. That does not mean, in many cases, that they stick with that preference at the end of the research. A lot of them change their minds, but 69 come in with a sort of preconceived idea of who it is they might choose for this particular offering in maybe a mortgage or current account. And 76%, so fully just over 3/4, say they actually want to complete their research and application journey online. They want to get it all done through the online channel. They don't want to have a break where they say, okay, now I've got to ring up to apply for the current account, now I've got to go into branch to do this. 76% actually say they want to complete that research and application journey online. Obviously, in some cases, that's not going to be possible, but what it means is that consumers have to be informed at every stage of why they can't complete the journey online. What is the sense, what is the need for them to do this through the phone or through in the branch? And also they need full information at each step about what they're going to need when they do that. They go to the branch and they don't have the full information about what it is that they're going to need to take, the documentation, how long it's going to take. They'll get very frustrated and they'll go with another brand who does give them that full kind of support and information through the process. So at sort of top level, what we've learned about these consumers. Let's have a little look at some of the data as we go through the credit card and current accounts DME that were conducted last year. As I say, we ask a number of questions at the beginning of the process. Do you have an existing brand preference is one of them. And we saw a moment ago that most people come in with a brand preference. However, in most of the markets here in the financial services industry that we look at, those preferences are quite widely spread. There's not, in either case, a really standout winner at this point in terms of an existing brand preference. So we have current accounts, 13% at this point before they've done any research in the process. They would probably choose Santander, 11% Lloyds, 11% Barclays, and then we get to the sub 10%, widely spread preferences. Very similar within credit cards, although different brands, different mix here slightly. Actually got Tesco coming out at 8% in terms of initial preference before research. Consumers saying at this point, I think Tesco would probably be the brand I would choose. Then 5% for Santander, Barclaycard, and then, as you can see, a lot, around 22 different brands coming in there. So there is a significant level of existing preference, but at this point in these particular markets, there's no one particularly big winner. It's quite a fragmented market, even though, as I say, a lot of consumers are coming in thinking they have an existing preference. So we asked them then to go off and do some research to find a product that suits their needs. What do? We saw 90% start at a search engine. So what are they actually searching for? Is it brand names? Is it general market terminology? As you can see here within current accounts, the leading term that's actually used is Santander. We saw a moment ago that that is the biggest preference that consumers have. It's still just 13%, but it still means that the brand is well known in people's minds. They're starting off by searching for that specifically. Obviously, this is sort of symptomatic of the way that consumers use search engines. We all use search engines for everything, even if we know what the URL is, or we have a good feeling what the URL is. We've seen here you've got Santander, Barclays, HSBC, people searching for brands that actually they could probably figure out what the URL was anyway. But it's very interesting behavior. We all naturally gravitate towards the search engine even if we know the URL. So Santander coming up actually is the most popular search term, closely followed by current accounts as a term at full stop, and then three more brands, Barclays, HSBC, TSB, and then the best current account coming in there as well. So interesting mix there of both a market term, but also very strong performance there from the brands themselves. On the flip side, and with credit cards, it's a little different. Credit cards, the most popular terminology searched for was just the term credit cards. Brands, much less popular as a search term. Barclaycard is really the only one there you've got doing any sort of volume in terms of searches. Capital One a bit further down, but vast majority of credit cards, people feeling perhaps here that this is something, it's a more open market, their minds are more open to the deals that are out there, and the various other brands, perhaps less brand-led in consumers' minds than the current account. So immediately you're starting to see a bit of a difference in terms of how consumers are researching these different products. So now let's take a little bit further step into how people start to make decisions in the DME. We're looking here at current accounts, for example, to drill down into one of the markets that we've looked at here. We ask consumers to do this research. We then ask them which brands at this point would make your shortlist to understand a little bit more about. Usually consumers pick 3 or 4 brands at this point, where they would then go and actually look in more depth at what the brands had to offer in terms of current accounts. And it's interesting to see what drives that shortlisting at this point. From the beginning, when we look at why would you have initial preference, most people say, oh, it's because I've used the brand before. They just come with a reasonably good impression of a brand because they've used it before. At this point, we're asking them to take more considered decisions. They've done a bit of research. Why are they now shortlisting a particular brand? And you can see they sort of fall into 3 different groups. They fall into product attributes. The strongest driver at this point for shortlisting is actually the brand allows for online banking. Consumers very much engaged with and wanting to use online banking, 28% actually mobile banking as well. But those are key determinant features in terms of getting onto the shortlist of these consumers and making it very clear that you have easy-to-use online banking. Familiarity with their names is very strong in terms of brand relationships, but then you've also got products easy to understand. The website helps you to compare options. You're getting this idea that actually this is a complex market, there's a lot of products out there, I really need the website to help me show what you've got, help me compare, and help me understand that the products and offers were simple. So not only have you got product attributes around the website, allowing for online banking, but also then the key features are website helping me understand options and the products easy to understand. So very important here for consumers just to make the shortlist, for the brand to make the shortlist, is to convince consumers quickly that you have easy to understand options and the website is helping consumers compare those options, really making them understand they have a product that suits their needs. And this comes out very strongly again when we look at the final preference. When consumers go through this research, as I say, we ask them to give us a list of shortlists, which usually three or four brands will make a shortlist. And then we say, well, actually, if you had to make a decision now, who would your final preference be? And then it's really interesting at this point to see whether the brands we saw at the beginning come out strongly or what happens in the research process to make people change their minds. And we've got a couple of things going on here that are really interesting. Firstly, you've got Santander. 13% said it was their first preference. By the time we get to the end of the research, 20% have said it's their final preference. So Santander have not only taken that first preference, but built on it and been very effective in convincing not only those initial consumers, but others that they have the right product for them. But look at the bottom here, you've got Nationwide coming through. Nationwide started with just an 8% preference, and at the end of the process, through the online research, has managed to convince 20% of consumers that they have the right product to suit these consumers' needs. So they've really done very effective conversion of consumers through that research process, significantly more effective than Lloyds and Barclays and Halifax, who have all pretty much stayed where they were, or even in the case of Barclays, dropped back one step. So you've got Santander building on existing preference, but also then you've got Nationwide doing something very effective to change people's minds. Why do people choose the final brands they choose? Best offers accounts for my needs comes here very strongly, so reflecting what we saw within Shortlist, but also they allow for online banking. We saw that's a real key determinant for these consumers. And then you see their options were easy to understand. It's not just that they've got the best offers, but they've got to be able to understand easily and quickly that those products suit their specific needs. So really interesting what's going on here in terms of what Nationwide's achieving. So let's take a look at this in a slightly different way. The shortlist, or the DME, was originally called the shortlist, and this is sort of essentially why, that's what we're asking consumers to do, is show us also that how the journey progresses from initial preference to recall, which sites do you visit, who do you shortlist, and who do you prefer. So we can look at it in this format to understand where the leakages are in the decision process. Where do you as a brand lose consumers? Is it right at the beginning you're not convinced consumers to visit you? Is it later in the process where you have the website comes into play and where consumers perhaps can't understand the products that you have and get confused? Is it at the shortlist phase where you make the shortlist, but then actually that step from shortlist to preference, you lose consumers? And what you've got here going on, I think you can see that Nationwide being actually the most successful here in both driving people to visit. There's smaller percentages than some of the other bigger brands, but actually if you know of the Nationwide as a brand, you're more likely to visit it than, say, if you've heard of Santander or Lloyds or Barclays. Nationwide actually convincing consumers within the initial research phase, and that's got a lot to do with the search results and search behaviours, convincing consumers to actually visit the site. Then also they are most successful, and that's all of these brands, at converting a shortlist place to a final preference. So they get on the 41% put nationwide on the shortlist, and we saw that was very much about current accounts, dealing with the account online, but also convincing consumers they have a product and service that meets their needs and they can compare easily. And they're most effective at turning that shortlist place into a preference. And this is about a number of things. This is about, as I say, convincing consumers that you have an easy-to-use online access, you have the product that suits their needs. Very much within the DME, it's also about those first impressions. Consumers in the DME are not spending hours doing the research. It's a fairly short snapshot of how do your research behaviors evaluate brands, and how do you make a decision based on, say, a fairly short interaction with the brands in many cases. So it's very much about initial impressions, and we'll see that in a moment. It's also interesting to see who brands in these markets are taking customers from. So you've got Nationwide there taking a 20% cut of this market, having originally at the very beginning only have 8% say that they would choose them. So where are those other customers coming from? Who are they stealing customers from? So this is a chart that just shows the initial preferences of those finally choosing Nationwide. So what this says is that 38% of those who finally chose Nationwide chose them at the beginning. That essentially means, when you look at the numbers, that most people who chose Nationwide at the beginning chose them at the end. They weren't swayed by any other brands. They were fairly brand loyal. What this also shows is that 11% of those who finally chose Nationwide originally chose HSBC. So Nationwide has managed to change their minds, managed to steal those consumers. They came in saying, oh, I think HSBC is the brand for me. By the end, they've changed their minds and they've gone with Nationwide. Similarly, 8% originally chose Barclays, 8% originally chose Lloyds. And by the end, Nationwide's sort of brand message, and as I say, most of this is about first impressions and search results, has managed to convince the consumers that actually Nationwide is better placed to suit their needs rather than HSBC, Barclays, Lloyds that they came in with. So it's really interesting to see there not only how Nationwide are parlaying a fairly small initial awareness, a pretty small initial preference, and then going through that online research journey and the initial impressions, they are really managing to more than double their initial preferences through to 20%. And they're stealing consumers from a fairly wide range of brands in this market. So as I say there, a lot of this about this particular piece in the DME is actually about that initial impression. It's about establishing a value proposition very quickly, and this sort of essentially provides our bridge between the DME and the DSE, because we're now getting into how does the website show consumers that you can meet their needs and evaluate your value proposition very quickly, and that's the initial impressions piece of the DSE, so looking at the actual website now. And that's really, really crucial in terms of whether people actually spend any time going any further into your website. That first 10 seconds of a page visit is absolutely critical. They're going, high percentage of them are going to leave unless you grab them very quickly with information that shows we are trustworthy, we have products that suit your needs, and you're going to be able to look at them and find them really quickly. And that's something actually Nationwide does very effectively when we look at the DSE, which we're going to move on to now, looking at the effectiveness of the websites themselves. Nationwide is actually scoring very highly in our DSE for both meeting needs and building trust. So the language convinces consumers that they're going to be able to find a brand that suits their needs. What kind of bank account do you need? And then there's the various different ways of cutting it to see the different products. Accounts of children, everyday accounts, account to pay interest, account with extra benefits. Consumers come away thinking, yeah, there will be something here that definitely suits my needs. The language is very much about best customer satisfaction with our high street competitors, so it's just starting that little drip feed of value as to why would you choose us, meeting the customer's sort of innate feeling that, do I trust this particular brand? I don't necessarily trust financial services brands. Okay, you have the best customer satisfaction. Also, very much at the bottom of the product pages here on the right, you've got information about external validation. It's not just Nationwide saying, yeah, we're great. It's Your Money Direct Awards, saying they're the best online current account provider, 5-star de facto, and then little things about the switch guarantee, which obviously everybody has, but it's just a constant drip feed of, yeah, we can make this easy for you, just that drip feed of value. So Nationwide doing well here in terms of meeting needs and building trust, and I think that's building a lot towards why they're doing so well within the DME, within the current accounts. So as I say, that's a bridge into, let's look at some of the DSE results, and just a very quick recap. I said at the beginning, this again is taking in-market consumers, somewhere between 20 and 50, depending on whether you're a client or not, and they are asked to go through this journey, mimicking a kind of journey they would actually take when they were researching and buying the product. They're asked to undertake a number of tasks and ask a lot of questions about that process. We also have the expert audit, which takes place at every step as well. So across these different 6 steps, there is something in the region of 500 data points showing you how effective the site is at each point in the journey, but also comparing that to your peers, and we'll see that in a moment. So we go through this 6-step journey across the site, and there are scores at each point, really helping you drill down and understand what the key pains are. So I said at the beginning, we've conducted 4 DSEs in 4 different markets within 2014. We actually conducted about 8 different studies, but they were across 4 different markets, so mortgages, current accounts, savings, and credit cards. Just to give you an idea at the top, sort of see where the brands are across each of those markets, I've put all the latest results here just on this one slide. Not expect you to read all the data. You're very welcome to have a copy of the webinar afterwards, but just to give you an idea of firstly the range of scores that we're getting here. We're going from sort of around sort of 60-ish at the top, 61 actually being the highest in this market, being Lloyd's current account, through to 25% AIB mortgages, and that's driven by certainly the lower end of the scale. It's driven by mostly a lack of online application possibilities, but also a lack of information about applications. What's the best channel for you? Why do you have to do it offline? Why do you have to do it in the branch? What do I need when I go and do it? So a lot of the lower scores are driven very much by a lack of information and online application capabilities. Conversely, at the top, you've got Lloyd's and Halifax coming out there doing well. A lot of that is around the comparison capabilities that those sites allow, but also why choose us? Those brands tend to be better at the sort of facilitating decisions. Why would I choose Lloyd's? Why would I choose Amex? We'll see in a moment. But 61%, is 61% good or bad? We would normally say a score of around 55, 56 was okay. That means you're just about meeting consumers' needs in this market. Anything above 65 is pretty good. So what we're actually saying here is, while 61 tops this particular market, there's still a lot of headspace here to improve that as a score. The highest score we're seeing in terms of brands in other markets, we're seeing around 67, 68% in some of the other markets that we've looked at. So I'm sorry, I have no idea what's just happened to my screen. We'll move on in a moment. So yes, we're looking at around 61% for this particular highest score. I'd say that's not the highest score that we get at all, 68, 67%. So there's still very much a lot of scope to improve that as a score. What's also interesting is, as we look at the different stages of the, I'm sorry, I have to start again, different stages of the DSE, it's not the case that one brand does particularly well at everything. You very rarely find a brand that comes the highest, nor that we find some brands do well at some pieces, and some brands do well at others. What you will also find is there are industry pains, which we will look at in a moment. So just to recap, looking here at the brands across those different markets, and let's look at the brands at aggregate level. I thought this is quite interesting because obviously a lot of the brands in our study operate in more than one of these markets. So what I've done is I've aggregated the score across the markets of brands that are active in at least 3 of those different DSEs. So you've now got HSBC and Lloyd's coming on around 55, 56, so dragging down a little bit. So the mortgages tends to drag the numbers down a little bit. And again, at the bottom, the lowest numbers generally driven by lack of application forms. And again, here you're seeing scores at an aggregate level, which indicate that even the top brands are only just meeting consumers' needs. So there's a lot of improvement that could be done across the steps here for each of these brands against each of these markets. And as I mentioned a moment ago, you don't get sort of uniformity of scores across those 6 different steps. What we often find is that industries and brands have key pains within particular parts of this journey, tend to do better at some level and worse at another. So looking at, on average, the scores of those industries across mortgages, savings, credit cards, and current accounts across the different steps, the 6 different steps of the journey, we can see very clearly there is a dip, for example, at facilitating decisions. On average, our industries do very poorly at helping consumers make final decisions in terms of, can they reach out and answer a question, can you show them how to find FAQ, help, contact details, and also the very important why choose you. What is it that makes you different as a brand? Your product, to a layman, very similar. What is it that makes you as a brand the brand that they want to transact with? And similarly, also evaluating options is a generally poorly scored piece. This is about helping consumers really understand you have a product to suit their needs, not just showing them your list of products. Brands tend to be not too bad at saying, well, this is what I've got. This is taking the next step and helping consumers make that decision as to what suits them specifically. And this is not about making financial services advice. We appreciate that's not possible. But it's about helping consumers navigate what is often a large amount of information, a large amount of products, and think about what actually suits their needs specifically, and helping them come away with the conviction that they've made the right choice. Obviously, don't say that going to facilitating decisions, why would I choose you? They're all linked. So let's have a look at some of those key pains here. Current accounts. I'm just picking one at the moment. We'll look at some of the others in a moment. So current account, what are the kind of things we're looking at? We're looking at how easy is it as a consumer to match a product to my specific needs. If it's a current account I need instant access, for example, if it's a current account that pays interest, what is it I'm looking at? Is it a current account that's mixed, combined in with the mortgage? And then how do I compare products? You've got 2 or 3. What is it that's different about them? How can I compare them side by side? And if you remember, what's really driving the decision within the DME was best offers account for my needs. Consumers absolutely vital that they come away at this point going, yep, I've done the research, this suits my needs the best. It's not just a current account that I've just managed to find. It's not the first one they presented me with. I've actually come across the comparison, and I've come away thinking, yep, this specifically suits my specific needs. Similarly, within mortgages, same problem here. Again, amplified here because there tend to be hundreds of different products across the market for mortgages. How do consumers really deal their way through that in-depth amount of information, find the one that really suits their needs, compare it against what other products you have, and help calculate what it actually means for me? This is very hard in many cases for consumers to do. We ask consumers to go out and do some very specific research around this. I said earlier, we ask consumers to undertake some tasks, and this is a prime example of the kind of thing that we ask consumers to do. We give them a very specific task: go and find a variable home loan, go and find a mortgage for first-time buyers with particular features. So how easy is it for them to actually go and find those products? Can they compare and filter on choices? Can they calculate which best suits their needs? And then obviously there's the best practice audit that comes in here. So you've got a mixture of those pieces of information. And we look at the effectiveness and the efficiency of that research. We look at how successful consumers are actually finding that piece of information for each different brand. On average, only around about 58% of consumers actually manage to find the product we're looking for, so that's pretty low. We're not asking them to find something that isn't there. When we create the presentation, create the research, we know, and we go to research for every single brand, that those products exist. So they're not being asked to look for something that doesn't exist. So it's a really poor result in terms of actually going to find a product here. And even then, when consumers actually manage to do it, they're pretty not as confident as they really ought to be that they have actually found it. So even for those who actually find the product, only around 70% say, yeah, I think I found the right one. So they're really struggling to find the right product, and even when they do so, they're not happy with the process. They're not confident that they managed to achieve it, and satisfaction levels are pretty low here too. So consumers are really struggling in a lot of the sites we looked at to not only locate a specific product, because you've got complicated tables you've seen here, there's tables of different rates, or you've got a lot of text one above the other. It's really difficult to find products with specific features, and then very difficult to actually compare those products side by side. Again, we get a lot of voice of customer here. Key communication here is it's all very confusing. Consumers just don't understand what they're being shown, and they don't understand how they're supposed to compare them, because actually it's made very hard in a lot of cases. You saw there RBS scores, one of the highest scores we have here, and that's because what they're doing here is a table that uses needs-based language. Mortgages for you, help me find a mortgage. It says at the top what it is that they're assuming. So you're a first-time buyer looking to borrow £125,000. It's as a consumer, you're like, okay, well, these are the ones that suit my needs. There are a lot of options here, of course, still a lot of options, but it's much easier than some of these early examples to look at the comparison here. You can, mortgage type is a field you can tweak at the top, repayment term, and then you can search and sort each of these by a number of multiple ranking options, and also quick access to more information. So it's not perfect, but consumers do come away from this going, yeah, actually, it's easier for me to compare here, and they had one of the highest success rates in actually finding the product. So multiple filtering, but also this language helped me find an order, needs-based language. And also what's interesting here is contact details that comes into the next piece as well, actually. If you're not happy, you're not sure you found the right thing, phone us with opening hours. So a little bit of comfort there for consumers if they're a bit confused. Yeah, I could always pick up the phone if I needed to. The Bank of America, actually, obviously, when we're doing this kind of research, we don't just look at the peers in your particular market. That's very interesting. But obviously, as we saw earlier, the highest score we were getting here was, what, 61? You may well find the highest score in this market is actually outside of your own direct peer group. It may be in America, it may be in Australia, it may be in Europe. So let's have a look at some of the other brands in this similar market and see what they're doing and see if there's anything you can take from, to learn from. Obviously, the regulatory system is different, but actually when you're showing consumers a comparison of products, the technology is available across all markets, and the usability principles remain. So Bank of America allowed consumers to filter by a variety of different type of requirements, then show their key options side by side with more filters. So really starting at this point to winnow down what it is that consumers are being shown, rather than showing with 300 different options saying, okay, well, these are the key ones, but then tab-based comparisons. So again, consumers coming away saying, actually, no, it's much easier to compare products here, and you've also got the phone numbers right next here, so there's a little bit of extra confidence. Chase, again, an example in the US, looking at current accounts here particularly. Same principles found with mortgages. Tend not to be quite so many offerings here, but again, there tend to be a handful, and consumers don't really understand what the differences between them are, and they don't really come away from it thinking, okay, I found the one that suits my needs the best. So you've got Chase here, reassuring consumers at the top of the page that all our checking accounts come with these key features. So mobile banking, for example, they all get a debit card. So the key features are the same, so you don't need to worry about those. And then you can do some more filtering through the site. I want a checking account with benefits, or I'm a student, I just want to see student accounts. So you can help consumers to take that next step in terms of filtering. You'll also notice on the left you've got a tab specifically why Chase checking accounts. So again, that's looking at the next piece here about facilitating decisions. What is it that makes Chase different? Why are you making a decision to go with Chase? And I'd say that takes us into this next piece I want to have a quick look at before we wrap up, is the facilitating decisions. How do brands help consumers make that final decision? They've found a product that suits their needs. Is there information as to why users should choose your brand? Can I contact you, ask questions, can save and print or forward the options for revisiting or looking later? A lot of the markets we're looking at within financial services is something you didn't necessarily make a unilateral decision to purchase. You might want to talk to a partner, particularly things like mortgages. So how easy is it for consumers to take that information away and make those decisions? It's absolutely vital that you make this sort of information very clear to consumers. So what happens if consumers have a problem? Well, we think, oh, they look at frequently asked questions, and that's absolutely vital. We have to have frequently asked questions. Help, very clear. 30% would gravitate to looking at that kind of information. So it's absolutely vital we support consumers in their look for answers. What is also important to realise is that actually around a fifth would just leave. If they had an issue, they wouldn't even look for the frequently asked questions. They would just go, oh, it's too hard, I'm leaving and going to look for somebody else. So not only do we have to support consumers who are looking for phone numbers, looking for frequently asked questions, but also coming through the whole sort of reason for the DSCs to exist, 20% of consumers, if they had an issue, would just leave. So it's really important that consumers are supported through this decision all the way. So let's look at credit cards, for example. Facilitate external comparison. Why am I choosing you? Why? How easy is it for me to take this information away and compare it with what somebody else is offering? If they've given me the ability to email myself a nice piece of information or print out a nice sheet that says all the fantastic features of their current accounts or their credit cards or whatever it happens to be, and for you I've just got to scribble down a piece of scrap paper with interest rate on because you haven't given me that, when I'm thinking about it later or I'm talking with a partner, who do you think I'm going to gravitate to more effectively? Contacting the company, phone numbers, opening hours, email, live chat, this kind of instant communication, as well as more considered, and consumers find that information, and then ultimately why choose you. So simple things, HSBC facilitating external comparison here within the current accounts. I can share, but I can also print, and I can print a nice piece of printout that's very clear in terms of the savings accounts I'm looking at. Just a simple piece of technology that helps consumers make that considered decision. AIB, we saw actually earlier AIB scores pretty low in terms of other areas, but actually they do pretty well in terms of contact options. So you can see here very clearly within the credit card information, apply via internet banking, also call me back, phone numbers, branch locations, live web chat. Multiple contact opportunities here for consumers, consistently applied throughout the product pages. However consumers would like to engage with the bank here, it's made very easy. And then when you actually look at things like the call me back and the live web chat, they tend to be intuitive to use and easy to use. So multiple contact options for consumers going through this decision process. And then why choose you? What is it that makes you different as a brand? Why choose a nationwide credit card? Very clearly here in the tabs, we're the world's largest building society, service-based, ethical, local communities, a lot of little things that are just a little bit different about that as a brand. Why would you choose a nationwide credit card? And also, again, as we saw earlier, it's not all about nationwide going, yay, we're great. It's also external validation. You've got the best online credit card provider, Your Money, but you've also got most responsible credit card lending practices. So it's just saying here, that constant drip feed to get a value again. came in from the home page we saw at the beginning, and it's through the site. Why would you choose us? We're the best choice for you, and we're not the only ones saying it. These external validation. You will see a lot of this sort of external validation coming in. A lot of insurers have gone for this in a big way. If you look at the Aviva website, look at the LV website, you've got this external validation, but you've also got a lot of voice of customer, a lot of sort of FIFO ratings, that, again, that constant drip feed of, yep, you're making the right decision, everybody else is making the right decision here too, you're not alone. It's very much something that a lot of people are looking at. And also Amex. Amex are an interesting one in this market as well. Amex very much focus a lot on why choose Amex. Our goal is simple, to make life more enjoyable. So a slightly different approach here. This is about Amex Express invites, or sort of the extra stuff you get for being an Amex customer, as well as things like refund, shop won't refund you, we will. You can see a doctor that speaks your language. So taking a slightly different approach to why you choose us, but really getting to the core of what Amex is about and why you as a consumer should choose the brand. Reassuring consumers, essentially holding their hand all the way through the process, and that's very much what this is all about. So what does this all mean? We've looked at DME, we've looked at DSE. There's a tremendous amount of data here across those multiple different financial services brands. Essentially what we saw at the beginning was that first preferences can be swayed. There's a little bit of loyalty there, but actually increasingly consumers can be swayed away from their financial services preferences by the right product and by an online offering that helps them understand what the products are and really makes them trust the brand from the first engagement. Those first impressions really count. It's a cliche, but it's a cliche because it's true. Why am I choosing you? Why am I choosing you to go any further with you in this research process? Why am I not just going somewhere else immediately? How can I know I can trust you? Meet users' needs. Give them a helping hand. Really absolutely vital in this market that consumers come away going, okay, I've got a good understanding of what your products are, and I've got a good understanding that you have one that suits my specific needs, not just I get to pick out of the 10. I really have to understand that it suits my specific needs, and you really need to help them do that, and you help them understand why your particular product suits their needs better than anybody else's. And you have to help them help themselves. This is this facilitating decisions piece. Help them understand what it is about your products that suits their needs, but also help them understand why you suit their needs best. Help them find FAQ, help them solve any issues they have quickly and easily, because you won't get a second chance. People are very aware there's a lot of brands in this market. We saw at the beginning, preference is extremely fragmented. It's very easy to lose people in this market, and you will do. So thank you very much for your attention this morning. I apologize for the little technical hitch we had halfway through. I hope it didn't harm your enjoyment of the webinar this morning. As I say, we ran these studies across multiple markets through 2014, and we will also be doing that through 2015 across credit cards, savings, mortgages, current accounts, and also personal loans coming up. Coming up in the next 2 or 3 months, particularly, we have credit cards in January, savings in February, and then going into Q2, mortgages, current accounts, and personal loans. So if you're interested in talking to us about our upcoming research or want more information about the research we conducted in 2014, do please reach out to us. I am rebecca.jennings@globalreviews.com. Please do drop me an email if you're interested in finding more information. The webinar has also been recorded and will be available on our website and through our YouTube channel if you want to hear it again, or indeed tell friends about or colleagues about the webinar. They can always catch up in their own time. So thank you very much. I don't know if anybody's had any opportunity to ask any questions. I've had one question about, one question is I mentioned about mobile. Yes, as I say, the research is conducted both across desktops and mobiles. The research I've talked to you about this morning has been about the desktops, the laptops, but the research is also conducted on the DME and the DSE across mobile, if that's something that is interesting. across UK, Ireland, and Australasia, but we've talked about the UK and Ireland this morning. So thank you very much for your attention this morning. It's hopefully been an interesting session, and as I say, do get in touch if you'd like a copy of the webinar, copy of the slides, or just to talk to us about the research. Thank you very much.